Welcome back to the Bridge Plus FinTech Odyssey, and a very good afternoon to our friends who have just joined us virtually as well as physically here at Bridge. We first launched in Singapore's Science Park in October 2017 and have become host to enterprises like Rev by AXA, the FinLab by UOB, as well as CapitaLand, Tenants, Shopee, Johnson & Johnson, and Dyson. 79 Robinson Road is the newest addition to our Bridge Plus family, having opened its doors earlier this year to welcome members such as the Bank of International Settlements Innovation Hub, Tribe, and other fast-growing companies. Our vision is to develop 79 Robinson Road into a destination at the center of the CBD of Singapore, where international fintech communities can gather regularly to confer and collaborate as a community. We do so through our community development initiatives and thoughtful event-driven content programming to bring people together to make great things happen. We invite like-minded leaders and professionals who have an interest to contribute and give back to the community to co-locate and collaborate with us. Whether you are a leading enterprise setting up an innovation lab or a startup scaling up for growth in the region in today's fast-paced environment, we provide the community to help you succeed. We are honored to have your participation and look forward to an exciting day of thought leadership. We are amid some very unusual times, but are thankful nevertheless to be able to continue having this yearly event for the continuous sharing and learning with our community. In light of the current measures, please make sure to be masked at all times and to maintain safe distancing. We would now like to invite our next panel up on stage. This panel will be made of heavyweights Samuel Rhee, Chief Investment Officer and Chairman of Endowus, and Shadab Taiyabi, President of Singapore FinTech Association, and will be moderated by Bernard Su, Chief Executive of FinTech Academy. Let's now put our hands together to welcome the panel up on stage. Thank you.
Guys, you can take your mask off.
Okay, mask off.
All right. So hi, good afternoon everyone who is present here today at 79RR and those tuning in from your laptops at home. Welcome, I'm Bernard Su, Chief Executive FinTech Academy and your moderator this afternoon. So today we're going to deep dive into digital wealth management, also known as WealthTech. And through this panel discussion here with my panelists, we're going to question whether technology has really improved investments returns. And we will also question the value of technology that has brought into the digital wealth management space. And for these two panels, this panel, I am very happy to have our experts here with us. Sam Rhee is obviously a domain expert in this area, CIO of Endowus, and of course chairman as well. And Mr. Shadab is the president of Singapore FinTech Association. So before and gentlemen, thank you so much for being here, taking time off to discuss this topic on can technology really improve our returns. And before we start this panel discussion, we have, for those of you tuning in and those here in 79RR, in case you have any questions, we have a link over here. Just take some time, key into your phones or laptops, www.sli.do and key in the participant code 716235. So take some time to do it right now. If you have any questions, just feel free to post it there. The last 10 minutes of this panel discussion, we will be addressing your burning questions. Okay, so take some time to do it right now. And all right, cool. Thank you so much. And before we kick off the panel, we're going to do a very quick polling, right? So if you click onto the app, there is a tab on polls. We're going to ask our audience a question first. Okay, I'm going to flash out this question. What is the most significant technology advancement that you yourself see in investing? So is it one, there's no right or wrong answer. So one, greater access to information through digitization. Two, online trading and robo-advisory apps. Three, blockchain, crypto, DeFi, and four, AI, quants, and algo trading. So there's no right or wrong answers. We just want to have a few what the poll results look like and where our audience inclination is right now. So just take some time, Kate, right now, the polls. Oh, okay. That's a strong, okay, so two came out very strongly. So 50% of the audience here tuning in, They like the greater access to information through digitization. And the second run-up is online trading and robo-advisors. All right, looks like we got the right experts here today. Okay, so we're going to kick off. Thanks so much for the polling, and it definitely helped us to shape today's conversation. And first of all, thank you so much, Samuel, to be here today. So I'll just let you do a very quick introduction about your experience and insights before we go on to the panel. Thank you.
Yeah, great. Thanks, Bernard, and thank you everybody for being here. It's great to be here at this special event. Just a quick intro about myself. I'm Sam. I've been in the industry more than a quarter decade now. Most of my time was at Morgan Stanley, one company for 17 years, in the asset management business in my last role, although I was in various roles across Hong Kong and Singapore. And I was the chief investment officer, and then I became the CEO of the organization. And then 4 or 5 years ago, I pivoted to the space of financial technology, and I have been building Endowus for the past 4 years. And Endowus, just a very quick introduction, is really here to help investors save better and invest better so they can live easier today and better tomorrow. We're trying to solve a pain point because I struggled myself. I think the next slide. There's a wonderful picture of Varun on the left, for those who are familiar in this SFF family. But really, it's about our own pain points of trying to manage our money and invest it. It's really very painful. It's costly. We look for good advice, but it's difficult to find it. So we've tried to develop a single app that will manage all of your wealth, both private wealth as well as public pension, because we feel that retirement adequacy is probably the single biggest generational challenge we face as a society. And financial service companies can do a lot more by leveraging technology to solve for these real deep problems that individuals have. We're not just a financial service company, but we're a content company as well. We really believe in financial education and improving financial literacy. So we've committed heavy resources to doing that, and that's why we sometimes host and participate in these wonderful webinars. So great to be here.
Right, thanks, Sam. So, Shadab, you have been in the space of robo-advisor as well. Maybe you can share with us some of your experience and background. Thank you.
Thanks, Bernard. My name is Shadab Taiyabi. I'm the president of the Singapore FinTech Association. I have close to 1.5 decades of experience in the financial services industry, but more specifically, past 4 to 5 years or so, I've been working. I had been working with a digital wealth technology solutions provider. So I have experience working with the technology companies as well as working on the financial industry, specifically focusing on asset management and wealth management. So just because I am part of the community, the growing SFA community as well, to a certain extent, when this idea of having a conversation on wealth came up, I thought I'm very, very happy to jump on the opportunity and have a chat, a bit more, in a more, I would say, conversational aspect of it, rather than keeping it very academic.
Thanks, Shadab. And we heard, thanks so much for the introduction, guys. We heard from our audience about what they think is a great innovation in wealth tech, all these years. And Shadab, just to understand your opinion, in your opinion, what are the key technological advances and digital innovation in this wealth management space?
Actually, there are many things to look at. I think we should all realize that what digitalization has done is it has brought consumers closer to the solutions where they were being delivered. And wealth management is not different. In a way, it has actually expanded the scope of delivery of these services to a much larger base. And everybody has access to their mobile phones, and through that, of course, to all types of financial services now, including wealth management. Of course, we can all see that payments has picked up quite a lot in the past decade or so, but so have other segments of the fintech industry as well, including wealth management. So specifically, I'll actually touch base on a few points on specifically wealth management, asset management. One is, of course, growth in wealth segment altogether as well. If you look at the Asian context, the Asian wealth mass affluent segment has probably grown the fastest in the world. And that has created a huge supply and demand problem at the same time as well, where you need to have the right solutions to actually cater to them. And players like Endowus and some of the other SFA members who are purely B2C, they've actually taken a very, I would say, very pragmatic approach to it in trying to establish solutions which are more catered to the demands and needs of the younger generation in a way that it matches to their wealth management expectations. Now, there is, of course, when you are providing a solution, it's not just about efficiency, it's all about what more are you bringing on the table. So the fees, the amount of liquidity that is there, and of course, the variety of solutions that are being offered as well. Um, Gone are the days where, you could just go in and buy certain stocks. You are looking at building your own portfolios. And when you get portfolios, you're also looking at portfolios which are probably being constructed by professionals, managed by professionals, and in a way that it creates that customers, I would say, as less engagement, as less involvement in the portfolio management as possible. So, Generation Z and of course the millennials and the younger generation, they are of course very digitally native. They want to look at things, as and when on the go, but at the same time they also want more services, more efficiency, and more clarity and transparency into what's happening as well. So these are some of the major trends that are actually driving the wealth management space, and uh, some of the most innovative solutions are coming in. Then the other aspect I'll probably touch is the variety in the type of products that are available or people are asking for. Of course, we are all familiar with ESG. It's a common household term now. There is enough demand coming in from the generation now, from the customers now, that is driving a lot of work that's already happening into ESG investing as well. Private assets, democratization of private assets as well, that's another aspect. So customers are demanding more. I would say not in a bad way. Customers are demanding more in a good way, that they know the industry is able to provide to them with all the technology and expertise that is already available. It's just about making the right effort to putting it together, while making sure that the engagement, customer engagement, is as I would say, tight as possible.
Thanks, man. Shadab. In fact, this is very valid. Customers are increasingly getting more savvy, getting used to good quality products, low pricing, fantastic UI UX, and a lot of times it comes as a hygiene, and they are wanting to see more value than the robo-advisors can provide. And in fact, when I was in banking, we spent a long time understanding the net promoter scores, and we built robo-advisors to cater to this demand from our customers in the bank. So how about you, Sam? Sam, what do you think are the key technological advances or innovation in this space, in your opinion? For yourself?
Yeah, I think that at the heart of it, I mean, we're a direct-to-consumer player, and so I would like to address more that space. I think at the heart of it, when we talk about technology and digitization, it really is fundamentally moving from an offline space to an online experience. And that word experience is really important, the user experience. A completely offline experience. I was actually at a sorry, I shouldn't mention the name, Cbank this morning, and it took an hour and a half to do a simple single FX transaction. And I was late to my next appointment because of that. It's something that should take literally minutes. We can do it on our app, but I couldn't find the FX conversion. It disappeared from my app, so I had to go to a physical bank branch and actually try to do this, and it took 1.5 hours. And it barely got it done. I mean, this is just ridiculous, right, in this day and age. But that's what technology is. I think that especially financial services was very slow in converting to this completely online experience. And obviously COVID was kind of a silver bullet for the industry of FinTech and WealthTech especially, because I think people obviously were not able to make offline transactions. And so there was a massive exodus and shift into the digitization and online space. So it's happening as we speak. We're still early days, but it's unfortunate that for content we have Netflix, we have retail, Amazon, we have every other service that is completely online, amazing, wonderful experiences. but yet financial services is still so behind in terms of the experience, the user experience that we are having at the moment. So there's a lot that we need to do, especially in wealth, which is a very specialized space. I think there's so much we can do to improve the way we do things. And I think one of the most important aspects of moving to a digital and technology first or a mobile first solution is always about cost. It is possible there to reduce cost at every layer. And as a result, financial services or wealth services in particular is traditionally a very expensive service. You have to have tens of millions of dollars saved up to go to a private bank where they charge you 1%, 2%, of your total assets. No other service takes that higher charge for the quality of service they provide. So I think it's ridiculous that these things are still happening, but we need to continue to lower cost because if you improve cost, that is directly going to improve your returns on the other side. So it's really meaningful to lower cost at every opportunity.
Thanks, Sam. In fact, I echo your complaints. It's real because while working in the bank, we have been monitoring the net promoter scores from clients, all this while for the past decade. Early part of my career, the customers are always complaining about the RMs are not there, they can't contact the RM. But in recent years, they have shifted, the NPS score has shifted. The complaints have been, how come there's so little digital service you're providing out there? Why is everything's not so transparent? So the customer have shifted and they reflected in the NPS score to the banks. And banks are frantically looking at that and trying hard to improve. Not just pricing, but the process. Ultimately, it's the process, the back-end process from front end all the way to back to make sure that you get at the click of a button, you get immediate gratification, not a week later. Sure. Thanks so much, Sam. It's very insightful. Sam, you have been in the wealth management space for a long time, veteran experts in this domain, CIO in the international banks, and most recently CIO in Endowus, a robo-advisor setup. Can you please share, how has investing changed, or how has technology affected investing over the last 10 to 20 years?
Yeah, it's interesting because I think many people talk about this new term, robo-advisor, and I wrote an article a while back saying that there is no real robo and we don't give advice, and so it's a misnomer. But it's a joke, half joke, because in many ways people misunderstand the term because I think they think that there's some kind of a robot that is using AI to try to develop an algorithm that's going to beat the market and give you better returns. That's not what a robo-advisor is. I think we should always focus on the second part of that word, which is advice. It really is automated advice. It's automated solutions. It's personalized advice. That's what's really, truly value added in a true robo-advisory platform. Because this space, the front part, the robo part or robot algorithm stuff, that's been around forever. That's called quant in the space of finance. And quant investing has been around forever. And there are amazing guys like Renaissance Technologies who's developed, amazing returns over the long term. But they have supercomputers. They have like 100 PhDs, in quant finance, and they've invested heavily, buying data from, multiple sources to try to beat the market and have an edge. And yet they often fail. So we know this is very difficult or almost impossible. And if you've broken that code, then you shouldn't be selling it to B2C, to everybody in the street. You should be keeping that secret to yourself to generate outsized returns like Renaissance Technology does. So if you don't believe that a robo-advisor is the one-shot solution to beating the market or giving you better returns, it really is, that's not what it's about. It really is about like bringing something that is a completely offline experience to online. It's something that is about focusing on advice and personalization. It's about lowering cost at every layer and giving you a better chance of success in investing your money and building wealth for the future. So that's the first point. I think that technology in investing is going to continue to evolve. I think we're at the very early stages. I think we can leverage technologies to solve real problems like, as I said, retirement. It's unfortunate that large financial institutions they have the technology, they have the people, they have the clients, they have everything, but yet they're not going after solving real problems that is so paramount like retirement. So we can use technology, best academic research, to develop retirement solutions for individuals at low cost that will really help them and give them a higher chance of success or higher probability of success in reaching their retirement adequacy. So these kind of challenges are ahead of us, and I think that we all need to rise to that challenge.
Right. Thanks, Ren. Thanks for sharing, Sam. Well, the robo-advisor has been a key innovation and for business model as well, and in the US and now recently in Asia, we see a lot of robo-advisors platform in Singapore and across Asia. Shadab, what are your thoughts about robo-advisors? Will they replace traditional wealth managers?
That's a very good question, I must say. I think I'll probably just touch some of the points that Sam mentioned earlier as well. In my opinion as well, there is no secret sauce to building portfolios in a way that you are beating the market much more in a way very differently. Because if you could generate an alpha, you would probably be running your hedge fund. The term robo-advisory is very, very casually used, but I think it primarily pinpoints to one aspect of it, which is digital wealth management. The ability to deploy wealth management solutions at scale using technology to customers through advisors, direct customers directly or through advisors. Now, if you think about that, you can clearly see that the real crux of the usage of technology that's where coming in it is the ability to create these end-to-end journeys which are completely scalable, where you can actually touch much more customers or advisors instead of being able to service only a certain smaller group of customers. Now, whether robo-advisors will replace traditional traditional wealth managers or not, I would say completely no to it. The reality is everybody has a different part to play. It's not about one versus another. It's about what are you bringing into the ecosystem, or what are you bringing to the new set of customers, which is different from what was being offered earlier to an existing set of customers. It's about expanding that customer base. It's about offering new services and solutions and products, which were probably not being offered just because you didn't have the technology at a certain point of time. I was just having a discussion with one of the very senior professionals in the banking industry, and she's a veteran. So one of the things she said, this was at the awards yesterday, SFF awards yesterday, one of the things she said was, I've been thinking about digital, for more than 25, 30 years, and all these solutions we wanted to do right from the beginning. We just didn't have the technology at that time, or maybe the technology was there, but only in maybe US defense arms. So now that the technology and the overall ecosystem is there to support, we are able to deploy more solutions. So the same is happening in wealth management as well. And if you compare it to payments, one of the very senior person told me the other day, wealth is where payments was 5 or 6 years ago. And that was a positive statement to say. What that person meant was, the way payments have shown growth in terms of various companies coming in and trying to drive off inefficiencies in the system, wealth is probably at that stage, and it just means a lot for the growth of digital wealth management to happen. And which is where I see that both will continue to play a part. One will be serving a different set of customers versus the other.
Thanks. I can't resist by asking Sam. Here you have been one of the traditional wealth managers, and before you founded Endowus, what's your take on this?
Yeah, I mean, people have this concept when we pit incumbents versus newcomers, and B2C versus B2B, or in this case traditional wealth managers and the new robo solutions. People naturally have naturally have the zero sum kind of mentality when they approach this, but it's not. It's not a zero sum. Wealth in the world has continued to grow, and it's accelerating the pace of growth. Singapore alone is $1 trillion wealth market. Endowus is known for being the first and only digital advisor for CPF. CPF addressable market is growing from $200 billion to $500 billion by the end of this decade. That's combined $1.5 trillion addressable market. Endowus is growing rapidly. It's probably one of the biggest robo-advisors or digital platforms already, in the billions, but that's not even a drop in the bucket. I like to say it's a vapor in the atmosphere. It's that's small. It's a fragment. It's a 0 point something % of the total market. So there's a long way to go in this. And it's not a zero-sum game. Just because Endowus does well doesn't mean other robos don't do well, or other incumbent banks are not growing their wealth pie either. So that's the first thing I would say. It's not a zero-sum game. Everybody is winning in this wealth game, but some people are doing a much better job at it in meeting the needs of their customers. And that's where I think, once again, to Shadab's point and my earlier point, that's where financial service companies really need to step up is, as a fiduciary. Fiduciary means doing what's in the best interest of our clients. Meeting their needs is paramount to what, our raison d'etre. So I think that's really critically important for us. Yeah, I'll stop there.
And maybe just to add to that, I think the financial institutions have been taking an active role in that as well, and that's where we'll probably come to that, but that's where B2B robos come in. They're also realizing that there's a need for traditional ways of delivery or distribution of products can be managed through application of technology, so you are able to expand the customer base. And for that to happen, you may build the technology yourself, or you may partner with different fintech companies as much as possible. This is where B2B robos come in as well, and we can see that to Sam's point as well, that it's not just about the it's not just about the application. It's a lot to do with the distribution as well, and that's where innovation can come in, and the ability to offer better and more customized solutions to end customers, which is where, I think both sides of the industry have to come together to a certain extent. And by come together, I mean through competition as well, as simple as that. And you provide a better solution versus the other one provides a better solution, even better solution for the customers. In the end, we are all looking at the society and the customers to win.
If I can just actually add to that, there's a demand side to this equation, which is consumers, right? So we want to educate them, improve financial literacy, give them, make them better advocates themselves, right? Client advocacy is really important and very lacking in Singapore, especially across Asia, but especially in Singapore. Clients need to ask for more of their financial service providers, ask them to lower cost, improve experiences, and provide access to better products and solutions. On the supply side, people like us and other competitors and incumbent players need to provide better service. And as you said, Shadab, rightly, that competition is going to enhance the quality of the service, the lowering of the cost, and the improvement in the experiences and access to better products, which will eventually benefit consumers. But the final piece is there has to be a regulatory framework within which we organize, because financial services is a regulated industry. It is a professional service. We all have to be licensed to provide advice and services that we provide. And so the regulator's role is critically important. And I think there is, while Singapore and MAS does a fantastic job, I think there's still room for improvement, especially when it comes to the space of wealth.
Thanks, Wen. And since you guys covered the part on the robo-advisory, there's the B2C component whereby the platform reaches out direct to the customers, and the B2B that Shadab used to be working for, Conifeed, providing banks the services. There's obviously a lot of competition there, and we heard from both of you that they're all trying to differentiate from each other in terms of customer proposition. How do you think that Shadab, maybe to you first, how do you think the industry will evolve between these two areas?
Thanks, Bernard, for the question. I think it's very important for us to realize that both B2C robos and B2B robos are trying to serve the same customer segment in the end. One is directly, one is through a financial institution. So if you look at the main differences between B2Bs and B2C robos, I think it's very clear that B2Bs also have technology solutions to deploy, but they don't have the customers directly. They actually work with the financial institution to do that. And there are few clear, I would say, touch points for them. One is, of course, the customer-driven, where the financial institutions deploys a solution which is more customer-focused, more customer-friendly, provides options or customizable solutions to the end customer as well. Second is, of course, advisor-led, creating efficiencies for the advisors to be able to service the customers, and also probably creating more efficiencies in terms of fees module as well, because the same advisor may now be able to address a larger set of customers at a hopefully slightly reduced fee as well, while keeping his profit margins the same. So in a way, in the end, it is the customer that's benefiting as well. At the same time, advisor has a bigger set of customers to play with, so that reduces his risk as well. And then thirdly, of course, is the ability to for the portfolio managers to be able to service the customers, for those discretionary mandates too. So there are, if you're looking at, the deployment of these digital wealth services through financial institutions, these are the key three touch points I would see that a B2B robo-advisor will be providing. Now, I actually wanted to touch, before we go to Sam, I just want to touch one point on the regulatory aspect that you mentioned. I think that's where I think the role of SFA comes in at a I would say significant level as well, and that's what we are. For those of you who are not very familiar, SFA is the largest industry association for the Singapore FinTech ecosystem, the only national industry association, and we have close to about 800 and 900 corporate members. 500 plus of them are FinTech companies. 500 plus of them are FinTech companies. What we are trying to do is to build that and to continually grow the FinTech ecosystem in Singapore, but it's a diverse group of companies, it's a diverse group of professionals. So what we have done is we have created some of these subcoms which actually focus on certain industry verticals. Payments subcom is what we launched 3 months ago, essentially working closely with the regulator in terms of providing the feedback and also working with them in let's say, working on some of the reform of the regulations as well. I think the same will happen for wealth and investment management landscape as well at some point of time. So very much looking forward to that, because as an industry body, we have an obligation to our members to be equally representative to the regulators, so that regulations are formed in a way which actually benefits the growth of the ecosystem altogether.
Absolutely, and first of all, Endowus is a proud member of SFA, and we're looking forward to any kind of work and subcommittees on the wealth side, because I think it is needed. The second thing I would say is that, especially to the question that was posed related to B2B and B2C, again, I think that the environment's kind of changing. Where I think initially, I would say from Endowus' perspective, when we first started, we heard a lot of stories about how, DBS had a strategy meeting because they were worried about Endowus, or, somebody was worried because Endowus is encroaching in their space. So we were seen as a competitor or a threat. But recently, it's interesting that commercial banks and private banks are reaching out to us. I think you saw on the slide, we have UBS, the biggest private bank in the world, as a shareholder in Endowus very recently. Other banks, many banks have actually approached us to collaborate, which is kind of strange because that's the purview of B2B players, right? And we're a direct-to-consumer B2C. But for example, we've solved the CPF investing piece, and no other bank has that end-to-end, journey, fully online experience of investing in CPF, not even DBS. And so, having these solutions allows us to work collaboratively. And so there are opportunities where I think we will work together, and that's a good thing. But at the same time, obviously, we'll compete head-on many of these other areas, and that's healthy too, as it benefits everybody, including consumers.
Thanks, Sam. In fact, for the bank I was working for, we did collaborate with Endowus. It's a very good partner, so great. So, but we understand that most fintech are here to collaborate, but there are those that, and recently there's a lot of topics about disruptive and contentious innovations, for instance, Robinhood. Yeah, and there are a lot of innovations, great ones and not so good ones. Sam, maybe to you, what do you think are the not so good innovations for the man on the street?
Yeah, I think, Robinhood has captured the imagination of many people. These meme stops, stonk, crypto space, all of these are really exciting spaces, DeFi. And I'm not one of those guys who are from traditional institutional background, and therefore I poo-poo these new emerging technologies and things. I think there's a space and place for everything. I don't believe crypto is going to replace fiat money, if that's what you're asking. But, in general, I embrace new technologies, new experiments in the space of finance and try to improve, many aspects of what traditional finance has been doing. But I think I would say that when we talk about wealth, we have to differentiate between the Robin Hoods of this world versus the robos and the digital wealth platforms that we're building. Because Robinhood and brokers are very much like transactional services. So like brokerage, like it's very similar to e-commerce. You want people to be very heavily engaged on the platform. You want people to transact regularly and be always on the app constantly, right? That's how you engage, convert and transact, and eventually make revenue and make money. Wealth is a very different business. We actually like clients who are gonna dump all their money in, maybe have a monthly recurring statement, but never look at the app. That's like the perfect customer for us. Low engagement, because that's how you build wealth over the long term, right? And so, when we meet VCs especially and people who look at the space, they don't quite get that. And wealth is very different. Like Singapore, people say, wow, Southeast Asia, humongous opportunity for wealth. But look at this statistic. Singapore has 200 to 250,000 millionaires. The rest of Southeast Asia combined has less than that. So where is the wealth? Where is the opportunity for a wealth tech company? Is it really Southeast Asia, Vietnam and Indonesia, or is it Singapore and maybe Hong Kong? So you have to think about this and really think out of the box when it comes to the space of wealth tech, because wealth takes time. You need to build wealth, as a nation, as a society, but as individuals and as a family. And so it takes time. Of course, we want to capture the early investors who are going to become eventually the millionaires of the future. But eventually, to be honest, as a business model, you need to target the segment that has wealth and the countries that have wealth.
That's it. Thanks. This is very good analysis coming from a wealth manager. Shadab, how about you? Your thoughts on the disruptive, contentious innovations out there? What's a not so great innovation, in your opinion?
I mean, I have noted what Sam said. I wouldn't agree with that to a certain extent, because I still think that as much as your business model is looking at the next few years of growth for you, this is the business model that works for you, which is you want the customers to be, putting the AUM in, and the fee revenue models are clearer for you, right? In that sense. But for organizations that have been around for many years, that are looking at building a much larger, or I would say a longer tail of customer base for themselves, they will probably be looking at more engagement right from the beginning, which is where you're looking at the future customers. I was at the hackathon, FinTech hackathon session earlier, where there was one company that talked about how they are trying to generate awareness on being careful about your finances and financial goals for 18 to 23-year-olds. The idea is to generate that so-called need in your mind right from the beginning, that once you graduate and once you start earning your first salary, you don't have to, you have to start paying your bills. You need to think about your future generation, your future as well. And that may include, at some point of time, marriage and kids as well, and then their education, then your retirement. So all those things will come. You can say no to it now, and it's a good thing they will come for some of us who actually choose to have in that direction. So I think from my perspective, it's all about building that, depending on the business model that you have, it's about building that customer base for you as of today, versus whether you want to plan it for the future as well, if you have the capacity, if you have the various other business channels that are looking forward to that as well. So I don't think I answered your question directly, but yeah, that's.
No, but actually, yeah, you're right, Shadab, and I don't think we're saying things differently. It's like two sides of the same coin. When I guess I was being half joking when I said, don't ever touch a app, but obviously engagement is really important, and I think where we engage clients especially is the aspect that you said, which is, on education, in really getting prepared for the future, right? And that's really critically important. Yeah, I forgot what I was going to say actually. So,
no, the best thing about a panel is we should be disagreeing, because then people would be here for a reason, right?
That's right. Thanks so much, guys. Another question, Shadab. In the SFA, we've seen a lot of robo-advisors coming in. We have more and more members every now and then, and a lot of word robo-advisors, and it's somewhat becoming saturated. with banks coming in with their own robos, brokerages also designing their own robos, and fintech strong in. Would you think that will be a consolidation in the market over the next few years?
That's a controversial question. Um, so let me answer it in a different way. So consolidation, M&A, and of course uh, acquisitions happening. It's definitely a possibility, and there's a good chance it might happen as well. But I think you have to look at it from a positive lens, because the reality is uh, markets may get saturated, and you may reach a tip or a plateau in terms of how much innovation you can do and create more efficiency in your processes. But in the end, as the customer size grows, as your business grows, you are probably reaching a good state where there is a possibility of you merging your business model with another companies, so that what you're generating out is bigger than this sum total of you anyways, right? So I would say that this is a very good, I mean, if it were to happen, it's a good thing. And overall, if you look at it from the ecosystem perspective, I'd say, when we are looking at, how the success, you know, I would say there's one of the success marks of success for an ecosystem. Of course, you're looking at more exits to happen. You're looking at the cycle or the median age from one company, Series A funding to Series B. That has been reducing as well. I think somebody was sharing with me the other day. It used to be 7 years on an average for Series A company to go into Series B. Now it has been reduced to 4 years, as an example. And we have had our first IPO, not IPO, but unicorn, who's actually going for an IPO. Niam, we all know, in Singapore. Of course, a bet going on now, in Q1, Q2, how many more unicorns will be born in Singapore. That's one. The second bet is, and of course, this is where I speak to my regional association counterparts in Malaysia, Indonesia, and the ASEAN countries. Are we looking at 10 to 15 IPOs in the next 5 years in ASEAN? I mean, that would be a good mark of success for the ecosystem as well. So to your question, consolidation, of course, is imminent, and if and when it happens, it's a good sign.
Sure. Sam, Endowus has been growing big, relatively big as compared to your competition. What's your take on this? Consolidation, M&A?
Yeah, any industry, I think, as it grows and matures, I think there is an opportunity for consolidation to happen. I think M&A is something that is naturally, something to look at. When you're, especially as Shadab highlighted, Series B, I don't think it's even 4 years. It's like 12 to 18 months these days. It feels like it. And especially when you're funded like that with VC money and private equity money. I think more recent example of Singlife, for example, being backed by private equity to acquire, or merge with Aviva. These kind of examples shows us that with the right backing and in the right opportunity set, these things are going to happen. And it's probably going to happen sooner rather than later. But the bigger opportunities, I think there'll be a lot more startups just in this space, in the wealth space and the fintech space. And having a very large lower base of companies will naturally lead to consolidation further down the line. So it's going to start bigger and then it will consolidate afterwards. So I think that's the natural transition. I was actually going to make that point and I forgot in my train of thought, but Robinhood and all this innovative solutions and apps, including Endowus and everybody else, I think what it does is it lowers the barrier for people that traditionally found it difficult, the space of investing and wealth and managing your money. We're not taught this very well by our, education system, our schools, or even at home. Even financial professionals, many of them don't know how to manage their own money. So I think that making it approachable, lowering the barrier or the hurdle for people to really take this seriously and take the first steps, as you said, to take control of your finances and your future. I think all of that is really, really important. And ESG, another solution that, like Endowus, launched the first ESG sustainable portfolios that are institutional grade in all of Asia for retail investors, like institutional funds. And built it into an advised portfolio, globally diversified, low cost. And that kind of stuff is achievable. And so lowering the barrier and making it much more approachable is truly democratization of wealth.
Thanks, guys. There's a few questions coming in from the audience, but I'm going to have a last question for the panel before I move on to the audience question. So to wrap up the panel as well. So there's a lot of things happening in the wealth tech space. What do you think that, how will wealth tech evolve looking forward? This question is to both of you. Maybe Sam, maybe you can, okay, let's do.
Keeping to the theme of the Singapore FinTech Festival this year, Web 3.0, I'll bring it to digital assets and tokenization and usage of blockchain basically. So my view is that as we grow further in the wealth management space, there will be hopefully more, not hopefully, but yeah, in my opinion, there will be more demand for digital assets for tokenization to happen. I mean, there are already players that are doing it, but it hasn't gone that mainstream yet with the larger players. So my view is that larger players would not have much of a choice but than to adopt these new technologies as well. Of course, we all know where DeFi might change, might bring a phenomenal change in the whole intermediation of financial services, delivery of financial services and products. But I leave that to another day. But that would be my broad overview on the future.
No, I mean, there's a ton of things to do, and some of it is not as glamorous as it seems, because I think people look at, especially companies like Endowus, we do B2C stuff. I think we can show the slide of our new creative campaign that's coming up soon, and we have somebody very glamorous. If you click again, I think it shows.
That's a very
glamorous person, and so that people look at this, like Joanne Pei and our creative campaigns, and it's on MRTs and stuff, and they get really like enamored by this. But guys, it's really tough building the pipes, in financial services. It's really difficult because the traditional ways of doing it was aunties printing out transaction sheets, using a ruler and typing in the stuff into an Excel CSV file and transmitting it through email, or before it was a fax. And then on the other side, you receive it. And these things are still going on. And we need to fix the pipes in order for us to have an amazing front-end experience. And that's still a long way away for us to achieve. And so, blockchain technology can be used in middle back offices, I think, much more efficiently and effectively. And adoption of technologies can be very widespread in middle back office pipe work throughout financial services, including wealth.
Thanks, man. Thanks for sharing all the insights and giving us a glimpse to the future. I'm going to open up the floor to questions from our audience, and we do have a few questions coming in. Okay, the top-rated question, I guess, is for Sam. How is Endowus robo-advisor more superior to your competitors?
I'm sure this is the first time you're getting that question. I'm sure you're getting this question for the first time.
In such a blatant manner, yes. Yeah, normally it's more like soft and gentle. It's superior in every way. Is the way I would answer it now. I think that the first difference is that, look, we're a very purpose-built tech stack. It's a purpose-built service. So we intentionally worked for 2 years, built a very differentiated tech stack, and that's why we couldn't work with Shadab and Quantifeed and people like that, because we had to build something specific for CPF, for example, which is a very different flow and way of doing things from traditional cash investing. And we didn't even have a guarantee that this was actually going to be approved even. And that's what innovative technology companies should be doing in financial services, is really going after stuff that hasn't been touched or cannot be even imagined. And we need to go after those things. And we take risks, and that's why it's a venture company as well. But that's really, how we're differentiated, because we are the first and only digital advisor for CPF. We brought passive investing into CPF. It didn't exist before. It seems so obvious that public pension, investing, should be passive. It's long-term, regular savings plans. But it didn't exist. We had random mutual funds, really expensive, some of them 6 to 8% in insurance-linked products that were available. So we had to solve for those problems. So I think we are a holistic manager. You can have all sorts of funds, cash, CPF, SRS, only wants to do so. We have ESG, core, satellite, income, cash. So the way to think of Endowus is not just a robo or just a digital wealth, but really it is the digital private bank of the future, But instead of needing 25, 50 million to go to UBS in the future, you can start with $1,000 at Endowus because it's better, easier, and cheaper.
I see, and you missed out a very important point. I heard the CIO is the best in the market. Okay, we have another question. It's about robo-advisory space. What's the difference about robo-advisory space of in Singapore and in the US? Will you have any?
Yeah, I think that the robo space began in the U.S., like with Wealthfront and Betterment, Wealthsimple in Canada, Nutmeg. Nick is based here in Singapore now. So the developed markets had it. And U.S. is a very different market. You have, exceptionally low-cost, wonderful, passive instruments. You have, financial service providers who are cutting edge. So it's a very different market, and robos actually did really well initially, captured the imagination, had a lot of engagement, captured early growth, but then it staggered because the incumbents came back very quickly. They had the same products, they had the same access, and they could solve this problem very quickly. Asia, it just went a completely different path. I don't know why, but we didn't do this like passive US kind of style of robo. We became this active monster, trying to develop an algorithm to beat the market type of robo, which I think is, not the best way to start. But I think these things will evolve and mature. And I think Asia, we're starting to see players which are much more sophisticated, and I think they will be much better as we go forward.
Yeah. Thanks. Shadab, for the Quantifeed, it's a B2B platform. Obviously, it's from Australia. But do you see any difference from being in Australia and when it shifted to Asia? Did they change anything?
Sorry, just to qualify, they are from Hong Kong.
Oh,
They're headquartered in Hong Kong.
My bad.
But they have an office in Australia, and decent sized office in Australia. So you are absolutely right on that front. I think I can speak for my past employer, and I did tell them that I'm going to speak here today. But I can say that they had a very clear vision right from the beginning that they just wanted to be B2B because they had seen the advent of delivery of robo-advisory services in the US, and they realized that for them to reach that scale in Asian markets, which are extremely fragmented, to have a larger customer base or investor base right from the beginning, to have a critical mass, they would probably struggle a lot, with their own name. So they decided it's better for them to work with financial institutions because as Asians, we sometimes, especially a few years before names like Endowus and other B2C robos in Singapore became, common household names because of, not just the good advertising and that, but also the ROI that you're producing, right? I have seen, and I am a customer of few robo-advisory firms in Singapore. Just to be very clear and disclose myself as well. Because in the end, I'm also looking at diversification. I'm also looking at understanding, how the various robo-advisors are working as well. So because of that, I think right from the beginning, they were very clear that it's better to go with financial institutions with the trust and respect they bring to the customers right away. And that's how the business model evolved. But of course, I think both sides of the spectrum, I would say B2C players as well as B2B players are looking at the other side of the spectrum from their side. We have had examples where B2C robos have pivoted to being B2B players as well. And we also have examples in Asia which have pivoted from B2C to B2B as well. Yeah.
Thanks. There's a few more questions, but we only have time for one more. I'm going to put this open for our panel. What are the actions that investors should take in order to stay away from before they pour money into a potentially fraudulent investments?
Yeah, it's quite unfortunate that you see a lot of this stuff in Facebook and social media, and you get bombarded by this stuff, and I haven't vetted all of them, so I have no idea whether they're legitimate or not. All these like financial education, investing classes and seminars and all this, but there are scams, and I think more than anything else, this is why financial education and improving literacy is so critically important. That we need individuals to take matters into their own hands and to really know and be able to differentiate what are the good quality advisors and the poor quality, what are the real investment options and what are the scams. And so I think that's really what it's all about. I don't think we can, talk specifics anyway. Yeah.
And my only comment to that would be safe, go with the regulated entities if you can, because that's the most important aspect for any, I'm sure our regulator is extremely diligent in there. So, and then if things go wrong beyond that also, that's the nature of investments. That's the risk that you took.
It's true. Thank you so much. We ran out of time for more questions, but we have definitely covered a lot pertaining to digital wealth management this afternoon, and we have to reach a close to this session. Once again, I'd like to thank Samuel and Shadab for being here today as our panel speakers. Thank you so much. It's been a great pleasure. And to our audience, thank you for tuning in. And until next time, thank you. Cheers.
Thank you, everybody.
Thanks, everyone.